Greetings. Sha'Ria Thomas here, your life coach, inspirational songstress, therapist, and consultant to an ultimately unique experience. And we have been all about financial health this month. And so I told you that I would share with you, bring us to the next level in terms of our financial health, to the next level of success for health. And how do we use our insurance as our personal bank? So I am so thankful to have this man right here who's going to be educating us and sharing his experience, his journey along the way, because I always like to take a authentic, holistic approach as well as we have this conversation together, and I hope it's beneficial for you all. Good evening.
What is happening? What is happening? What to do? What to do? What's going on?
How are you?
I'm great.
Wonderful.
I'm great, yeah.
So I have this gentleman right here, Kevan Ware, and he is an entrepreneur and has been for the past over 22 years. He'll tell you more about himself. And he is a man of many different hats, I will say. But we're kind of just going to focus on, because he'll be back, okay? He'll be back and sharing more in terms of all of what he does. But today we're focusing on his area of expertise when it comes to insurance. And he's a life insurance agent amongst so many more areas in terms of his lifestyle consulting and his podcast studio. And so tell us a little bit more about who you are and what you do.
Well, I'm going to do the short version, obviously,
Yes, please
so we
do.
can get to the nuts and bolts of things. I said 22 years, actually, on the 20th, which was this Wednesday. It's Wednesday? Whatever the 20th was,
Okay.
will mark my 22nd year of being an entrepreneur. Yeah, firing my boss August 20, 2002, and walking out. And yeah, so what that meant is that I have an insurance brokerage firm for 22 years, and I help entrepreneurs. Yes, I didn't start helping them until I initially started to help state, federal, military, and postal employees.
Okay.
What that means is that I was their benefits counselor. I got certified and started to tell them what they had on their job. That's specific to them, whether it's TSP or deferred comp for state arena. They obviously had these different benefits but didn't know exactly how they work.
Okay.
In addition to those savings program or retirement plans, even their pensions, they didn't necessarily know what they had, let alone how it works. And for instance, the TSP have different funds, and these funds, and they just recently, within the last 5 to 10 years, added a fund. All of that knick-knack stuff that is specific to them, I obviously studied and was certified to speak to them about their benefits, not only on the job, but off the job. So that's when the lifestyle consultant came in. What that meant is that I would speak to one of those federal, or state, or postal, or military employee, and to even put a pin in that, I am a disabled veteran. So I know how it is, basically, in this lifestyle consultant that I'm doing. I know what it is to be a soldier. I know what it is to be a soldier that's a federal employee, that's different than somebody that works for EPA.
Okay.
We all the way in as a military employee because we are soldiers. So I'm saying all that to say there's different levels to even those lifestyles, but either way, the individual is not being educated on what their lifestyle is, what their benefits are specific to them, and more importantly, how to leverage them. So not only do I do insurance, I do life insurance, annuity, savings, retirement, Medicare, long-term care, disability, and it took me years, of course, to understand these products and or service. But my point is that when individuals were in these different lifestyles, that of state and federal, I would speak to them, and they always had, and I would tell you this, they always had something they wanted to do outside of that lifestyle.
Right.
Which, i.e., could be an entrepreneur or they were retiring. Either way, they would bombard me with after we kind of talk, and they let open some of their thoughts and their story, because they're talking to me about everything. If they're married, if they have children, their financial awareness and or lack thereof, all of that is being shared with me. And then what happens is that I would ask a specific question, and this specific question would open the floodgates. What was that specific question? It was more of, so what else did you want to do outside your job? And what that meant was, I didn't put any parameters on it. I just asked them that.
Okay.
And some people was like, I don't know, or I got this idea. And I'm like, oh, okay. So I'm in their cubicle talking to them at their job, and they looking over their shoulder for the manager. My point is that lifestyle of talking to them, they wanted more information. Not only on what they had at the job, but what are some of the things that they had outside of the job, how to supplement. I mean, like AFLAC and disability insurance is something that's kind of new in the insurance world. But what is it that's like AFLAC that is sometimes specific to them? Whether it's an entrepreneur, whether it's a retiree, whether it's a state, federal, military person. So to make a long story short is, I would speak to these individuals, so instead of putting a Band-Aid over an open wound, which means that, I need some life insurance. Okay, term, whole life. Okay, what can you afford? And tell them the difference between those two and the affordability of them. And when I know that if I didn't speak to them about their personal credit, their corporate credit, meaning like business credit, because if they don't know about their personal credit, there ain't no way that they have business credit. My point is that those are all wrapped into benefits to me. And I don't just share my knowledge about just life insurance or savings or annuities or any of those, or Medicare, because when I talk to an individual, if they're a woman like yourself, well, you have kids, you have uncles, aunties, you have a mother, so sometimes you're the guardian of those individuals. Or so I'm saying that to say that when I speak to you, I'm not just speaking to you just for your specific situation. I'm letting you know, hey, yeah, I do insurance, but I also do stuff for your age group, and I do things for your aunt's age group, which is different from yours. You might be going into the aunt's lifestyle. Either way, I have an idea of what that lifestyle is, so I can actually give you ideas on what that look like, how it might work, what you could do to set yourself up for it, whether you are not having a business, or if you are just in the corporate world, or if you're retired and you still got this newfound energy and time and you want to do something differently. Any of those things you should consider benefits. That could be life insurance, it could be savings, it can be disability, it can be tax shelter, annuities, it could be all these different things. So alongside of that, that's primarily what I do in that arena, but then I expanded it.
Okay.
And we'll talk about that later, but does that answer your question? All the rest of the stuff that I do with the media and all that good stuff was to give us a platform like right now to talk about these subject matters and speak to you guys and be specific to different lifestyles.
Right.
Everybody's situation and timing is not the same. So that's more or less how I came to be a lifestyle consultant. It just so happened to have a brokerage firm that does insurance and does stuff like that.
Wonderful.
Does that make sense?
That makes a lot of sense.
Cool.
And so vast in terms of the type of, as you say, benefits. Some might just say services that you provide, but benefits because they can benefit us, and sometimes just as individuals we're unaware of what those benefits are. So in terms of, you named several different avenues, different types of benefits, from life insurance, I heard medical insurance, annuities. Can you speak a little bit more to what is the difference between, say, life insurance, your basic life insurance, or annuities?
Well, annuity is a tool within life insurance.
Mm-hmm.
So let me make that distinction, meaning like you have life insurance. Yay! All right. There's only two kinds of life insurance.
Okay.
It's term,
Mm-hmm.
10, 20, 30 years, right? They have little riders. Riders are AKA options, all right? And it can be children's insurance agreement. It can be disability. These are all options that you can put, but there's only two,
Mm-hmm.
whole life and term.
Got it.
Now, between the two of them, term is just what it is. It's for a specific period of time. The premium is the payment. It's going to generally be the same
Mm-hmm.
all the way through those 10, 20, 30 years, right? And then after which time it ceases, means it stops, all right? Then you have whole life. Whole life has taken on many different hats now under the whole life banner, which is called universal life, and those are different variations of whole life. Whole life means that the insurance company is insuring you for your whole life.
Okay.
Now, that also means that the premium, which is the payment, like I said, is generally higher. Why? Because the risk assessment that the insurance company is taking on insuring you for your whole life. So when you get in if you think about it, if you're 31 years old and you got insurance and you got a whole life policy, the insurance company is taking on the risk of insuring you all the way until you die.
Okay. Mm-hmm.
So that means that risk, they're going to put some kind of premium
Right.
or money
Mm-hmm.
that you should pay to offset the risk that they have for you. So under that banner, you have UL policies, and the UL policies are dealing with cash value.
Okay.
And only whole life has cash value.
Mhm.
Term does not.
Okay.
All right. Now with this cash value, that's when you pay your premiums, and a portion of the premiums goes into this AKA account,
Mm-hmm.
and it's called cash value. So when you hear people speaking about borrowing from their policies and things of that nature, you always know it's not a term.
Okay.
It's a whole life.
Got it.
Now with this whole life, you have these perks.
Mm-hmm.
The perks are cash value, which is this other account
Mm-hmm.
that is building up as time goes on. It generally gives you an interest or guaranteed interest of that account per annual, meaning like every year they'll say they'll give you 2% interest on that account.
Okay.
So as it builds up, they annually going to give you 2% money on that money,
Mhm.
right? Now, as it relates to the annuity, I just so happen to work with a company that has both of those, and then there's another account over here that's
Mhm.
called an annuity.
Okay.
Now, this annuity means that three things. One is you never lose your premium in an annuity.
Mm-hmm.
That means once money is in, it's in. You do have one other one, but it's called variable annuity. It's in the name, variable annuity. I don't do those,
Okay.
and just what it is varies.
Changes.
It changes.
Mhm.
So the principle about annuities is that you never lose your principles. Those can be fixed annuities or what's called equity index annuities. We don't have to get into the specifics of those two, but we do know it's two different ones, and with these two different ones, your premium, that means whatever you have in it, you never lose it.
Okay.
All right. Now you also have a benefit of annuities of what's called monthly life income. So this monthly life income piece is, example, with an annuity, let me double back. An annuity is a contract between you and the insurance company. That's actually number one.
Okay.
Contract between you and the insurance company. The reason why I double back and that's so important is because contract,
Okay.
you and the insurance company.
Right.
Okay, well, what's a contract? A policy.
Okay.
That means a policy will be mailed to you and or emailed to you and electronically nowadays. My point is, in my opinion, always get it physical. and then double back to the company and get it electronically. My thoughts. Either way, when you do the annuity, it's a contract. Contract, paper, proof. Proof is in the safety box. Shout out to my mom. Walking me and my brother to the safety box and be like, okay, if something happened to me, it was in the closet on the side, behind something, you know. Either way, wherever that place is that they're, you know, putting their stuff, that policy should be there, which means that if something would happen to that individual, you at least have a space and a place to go to have a starting point. And that starting point is a policy when it comes to insurance. Now also, everything that I say as far as premiums and annuities and how much they're going to give and all that good stuff, that is going to be in the policy too. What does that mean? That means that you have everything at least in writing for that money or that annuity that you purchase. It's a new kid on the block, meaning annuities.
Okay.
And the reason why annuities became so prominent is because the age expectancy has gone up. Now this is synonymous with Social Security not being around, right? That's how a new concept called annuities, which is shout out to Doug McDermott. I learned from the guy who created the annuity in Canada. Meaning like, right, it was a Canadian concept, right? So I did. I went to San Diego and studied with him for a week, and this was at least 20 years ago.
Okay.
At least 20, maybe 19 years ago. It was a long, long time. So my point is that I learned it because I was dealing with seniors. And seniors at the time, and still to this day, it's 80,000 seniors. I apologize for calling them seniors. The mature market. Okay. The mature market is 80,000 turning 65 years old every single day for the next 15 years. That's a lot of people. That's not even counting me and you.
Okay.
So with that being said, retirement and tax shelter is very important to not only have the risk factor not be involved as much, but also some directions and or information that can be shared with whoever the beneficiary is, so they don't have to start over. So annuities and insurance, I believe, is not just for the dying or the people who were the beneficiary to benefit. Annuity gives a chance to, i.e., have the person who has the money or the information and the money to make it work for themselves while they're living.
Okay.
Now, monthly life income, I'm coming back to that point I was making before I double back to the contract between you and the insurance company. Annuity has what's called monthly life income. So a good example, let's just use a round number, $100,000. They're going to say inside of that document, that policy, they're going to say, all right, at the age of 65, you have $100,000 in this annuity, right? All right, you can either allot to take all the $100,000 out and dip. Let's give me my check. No. Or they'll say, we can pay you $800 every month. They're going to have to pay you that $800 every month until the day you die. It's called monthly life income.
Monthly life income.
Yes.
Okay.
So that is the general, yet I believe specific on how you can share what insurance is, what the players are, which is the term and whole life, what whole life is, and how cash value is a part of it, which is a tool, and then how it actually can make money inside the cash value with the interest. But also there's another product over here that allows you to not only have another way of making money and saving money, but that has an interest connected to it too. Meaning like it's going to have accrued interest along with the cash value. And here's the most important part, people, about this particular concept that I'm speaking about, is that in the cash value, you can't take money out of it. It's called a policy loan.
Okay.
And the annuity,
Mhm.
you just take the money out.
Okay.
Meaning that it's money that has already been taxed and you have the ability to touch it, which is different from that double back into that federal employee that has TSP and they have issues with taking money out because they have to suffer a hardship or a school or a hardship. And hardship is a hardship. It's not what you think a hardship is. They determine if you're going to get the, I'm not getting into that.
Qualify.
Yeah, qualify for it.
Mhm.
But then you still have to pay it back, and then there's penalties because they're not 59 and a half. So you're accruing all these different aspects to taking money out that they don't want you to take out, and they don't give you an easy way to take it out. Well, what if you needed another alternative?
Okay.
The annuity could be the other alternative, whether it's tax shelter reasonings or you need another vehicle that's not going to be due to the market loss and all that good stuff, and you can get access to it.
Got it. Okay. I'm big on summary because he gave us a lot of information.
Mm-hmm.
I hope you all were still listening and we want to check back in, right? Because I know I'm just going to be very transparent that when it comes to the start of insurance before, actually, this is my mentor, actually.
Oh,
Yes.
Thank
when
you.
it comes to
my mentor. You know what I'm saying? You know stuff that
Yeah,
I don't know and vice versa.
exactly,
That's all I'm
exactly.
saying.
It's a
For sure.
mutual thing.
Mm-hmm.
But at the start of it, I was very ignorant as to just, okay, I just know I need insurance and that's it. And some of us are that way. But to understand it as to that big word of benefit, how do I benefit? What's the benefit for me? Yes, I'm covered because I may pass away, my children, and ensuring that they're taken care of, or family, whoever is going to take care of us, in terms of when that time comes. But a key thing that Kevan said was the types of insurance, and I want to make sure that we are on one accord, is the term, the whole, and annuities is aside from. And the key thing is whole life for our entire life is covered, but the premium, meaning just the monthly amount we pay every month, just like car insurance, right? Same concept, is higher. Term is only for, say, 10 years, 20, 30, whatever that term is, and then we're not covered anymore, basically. But usually those are lower in rate per
Premiums,
month. Yeah,
Mhm.
that is paid. This part of, and there's also a cash value, as you said, for whole life. But
That's summary. Go ahead with the summary.
there we go.
Mhm.
This concept of annuity, which I wanted to ensure that people are educated about just insurance, period, and that part of it being, I like to call it, being your own bank because of being able to cash out, being able to utilize it while you're still alive, and even how can you branch off and utilize that money for, say, a
Business.
there you go.
And
Exactly.
leverage it to actually get corporate credit because they ask you what you got. If you bring the policy and say it's $80,000 in there, that's used as collateral. Not even collateral. It's used as equity, if you want to call it that.
Yes.
My point is that those are all things that, yes, once known, you can leverage it to get other things that separates your personal to your business.
Yes.
You leverage it to jumpstart it, and then you take it around. And the reason why I'm saying that is because, I'm going to say it, is because it's always good to separate your business from your personal. That means your social security number from your EIN number. That is important. Why? Because this, which is you, is connected to your social security, it's connected to your Medicare, it's connected to Medicaid, it's connected to your insurance, it's connected to all those things that you worked for and earned, and you want to understand that you don't want anything else outside to mess with those benefits that you're so justly deserving of. I'm gonna say it like that.
I understand.
Yeah.
Definitely. Now that the part of just the sense taking someone who just in terms of what we're talking about and having they decide that yeah, you know what, I think I do want an annuity. I do want to be able to have the benefit of insurance, but also being able to cash out. Because I do have that idea that I've been brainstorming, but I just didn't have the finances to pay for.
Mm-hmm.
Walk us through what that would take. What would that look like for someone if they were interested in obtaining an annuity, and at what point would they be able to cash out? Because people want to know about that.
Right. Well, let me pause you about the jargon that you
The
use.
jargon.
Okay. Cash out
Uh-huh.
is really synonymous with things that you take it out and you're gone. I.e., casinos and such like that. When you get your earnings, you go cash out.
Right.
So I'm not going
I
to.
did that to get y'all's attention.
Yeah, I'm not going to prescribe to that term.
Yes.
I'm going to say your eligibility to your earnings
Okay.
to do other things
There
for
we go.
for you.
The insurance
That may or
language.
may not be implicating tax challenges by you doing so.
Mm-hmm.
Meaning, like when you go get your money, it's Uncle Sam like, how much you got?
Mm-hmm.
Or are you just taking something out and it's like quote unquote a bank or a savings account? Annuity is a account that insurance companies came up with where it mimics what a savings or checking account does at the bank.
Okay.
So, but they don't call them accounts. They call them annuities.
Policies, right?
Policy that has annuity that has an account that has some money in it.
Okay.
Okay. And so to your point is, or to answer your question is that it depends.
Mm-hmm.
It depends on when a client comes to me, who are they interested in insuring or thinking about or benefiting from?
Okay.
What does that mean? That means, are they married? Do they have kids? Are you thinking about insuring everybody or just yourself?
Mm-hmm.
Do you have any outside circumstances that would stop us from getting this?
Mm-hmm.
I.e., outside circumstances, pre-existing conditions.
Okay.
These are things that you have been pre-diagnosed with, and it's in the MIB, which is the Medical Information Bureau, which is when you go to the doctor and he writes up that thing and then you turn it out and give it to the lady outside. She actually types that into this database,
Mm-hmm.
and it's called the MIB, Medical Information Bureau. So that Medical Information Bureau is generally how insurance companies take on the idea of underwriting the risk of insuring you. They go and see that database. All right, so I digress. It depends on what the client is, who and what he or she wants to do, what their objective is, whether it's saving of taxes, tax shelters, that's what that's called, or they want to have income later, or they want to have income now, or they want to not only insure themselves, but they want to insure their children, but they want to have different an individual policy for him or her. So it's not connected to them at the job and a policy and a rider at the job when you don't know if you're going to be at the job, nor do you know if you're going to get insurance on the outside for the individual child, because not a lot of companies do it for children under 18.
Okay.
Whole nother ballgame.
Mm-hmm.
My point is it depends on the person and what they want to do and what they want to have access to, when they want to have access to it, if they want to have tax shelters, do they want to have the money to go directly to an individual or several individuals, that's beneficiary and contingent beneficiary. That's also making sure that that money that they have as insurance is enough to pay for the house that the kids are in just in case they pass.
Mm-hmm.
Maybe they got, it's all kinds of different scenarios that allows me to share ideas with that person specific to them, and then find out what their objective is on when they want to touch the money, if they want to touch the money, do they have tax tax questions that needs to be addressed by having this money,
Okay.
whether they put it in or they take it out. There's always some tax implications, and those are things that is a case by case basis.
I'm big on case scenarios. Let's create one. How about that?
Go ahead.
So say that there is a 40-year-old single mother.
How many kids?
3 children.
Okay.
And she also cares for her mother, who is who has a medical condition.
Okay.
So she's the primary care provider as
Okay.
well. And she is still working full time,
Okay.
but at some point she would like to do something on the side in terms of having her own business. And she comes to you.
That's a good specific scenario. I got it. Continue. Whatever.
And she comes to you, and she's had insurance in the past, but she'd like to know what are my options. And I do want to, I've heard about this thing of that you can have like living benefits, and what does that mean, so I can be able to get some money. I know it's not going to be all of it, but I want to have at least some money that, say, in a year I can be able to start that business that I've really been dreaming about.
Okay. Just for the sake of time,
Yes.
I am going to address this scenario of this 40-year-old woman, 3 kids, right? A caregiver of her mom.
Yes.
Didn't give me the age, don't matter. Has a full-time job and is wanting to have a business. Wanting to have one, or has one
She wants
currently?
to have one.
Wants to have one.
Yeah.
Okay. I would address this 40-year-old woman with his 3 kids and mother with what is the primary thing that she wants to address. Like, what's the first, why you call me? Like, straight up, what's up? What you want to do? Now, and I'm saying that because insuring herself and her children could be a different scenario than insuring her mom,
Okay.
who is in the house, maybe bedridden or not, may have Alzheimer's. Either way, she is the primary care of her.
Right.
So now I'm asking her, you know what? I really don't like asking about budgets. You have a budget for this. It's a corny way of finding out if the client has some kind of parameters on what they want to put aside for it. Right.
Okay.
Now, generally they don't know it, so it's always going to be lower than what. But it's a starting point.
Yes.
So that starting point of speaking to this 40-year-old woman with these 3 kids, that's the caregiver of this, of her mom.
Yes.
I'm asking her primarily, who you want to insure?
I want to insure all of them.
Okay, so then I would go to understanding how old the children are, 3 kids, because if they're over 18, then it's a different scenario than if they are under 18. At the job, does she have the insurance at the job already? Does she have the kids on the job, on the insurance at the job? Because that's still a question that needs to be asked that she doesn't know. And how much is it? At least I'm asking her to go and inquire.
Okay.
Right? I don't know. If you don't know, I'm like, well, you should know.
Right.
Go to your HR, find out. Now, that's very important in sidebar. That's very important because if you don't have a policy for the insurance for the kids at home through your job, because they don't give policies out.
Okay.
I urge you to get the policy at your job and put it and have it in your hand and read it. I challenge you to do that. So the point is that if you do have it or don't, at least I'm asking the client to go inquire. Get an understanding of what you got.
Okay.
Now, if you don't understand it, bring it on back. I'll tell you what it is. I show you how it works, how much is taken out your checks, or, for it per pay period, or every 2 weeks, or what have you. So I'm educating you on what you have first. 40-year-old, 50-year-old, 60-year-old, don't matter. Then I'm going to actually determine what the situation is with her mom, meaning what's the ailment. Yeah. What is the ailment? And if that ailment is bringing in income because of it, then I would ask that. Because why? That income could pay for her policy.
Okay.
So now it's not even on her, per se. It's on her to make the decision to do it, because she's still the breadwinner and or, whatever, power of attorney.
Okay.
Whatever the jargon is for, she's in charge of her mom.
Right.
And
Yeah,
her, So my point being is that with that scenario, with the 3 kids and the mom and scenario, we're gonna deal with that first before we talk about business. Because if we don't understand that, then it's hard for us to even determine what she can save. Who's she saving for? Is she saving for the kids? Okay, which one? Or well, maybe you can get this annuity for the child, that the child has now a policy specifically to the child.
Okay.
It's not on your policy, parents. It's in their individual policy for the child.
Okay.
You're paying for it. Okay. It's an annuity. It grows. That scenario that I was telling you about earlier, that I hopefully educated you on, with the cash value and the annuity. Same difference, but now it's for the specific child.
Okay. And that could be for all of them.
Each individual child. Correct.
Right. Okay.
Now, that annuity generally may or may not be good for the mother. Why? Because of her previous conditions. We don't know what that is. You didn't give me that scenario. I'm just playing devil's advocate.
Stage 4 cancer. Yeah.
So her scenarios might be what's called final expense.
Okay.
Final expense is generally up to $30,000 to $35,000. It goes down lower when you get of age. But the point is that going down means that if you're 85, you're only going to be eligible for like $20,000 to $25,000. But if you're 75, now you may be eligible for all of that and up to $35,000. Final expense is just what it is. They AKA call it burial insurance. It's where it gives $35,000 or less to take care of if something happens to that person. They can quote unquote be buried. Okay, so that was something that I would entertain with her for her mom. Especially if you say that you just sweeten the pot with the stage 4 cancer piece.
Yes.
Now, once that's told me, had that been told to me in the beginning, I already know what the only option for her is. And that may or may not be an option. I might be telling you, look, you're going to have to come up with some creative ways of getting at least $5,000 to $10,000 to the side, because generally speaking, she may or may not be eligible for final expense.
Okay. Because of that precondition.
Correct. In addition to that, she may say that she wanted to be cremated. Now, it's different prices in different states. I got my insurance in 7 countries. 7 states.
Wow.
7 countries. No, it's 7 states. So my point is that it's different in each state.
Okay.
Meaning, to bury somebody, it is the highest in California, and the second highest just so happened to be the state that I'm from, Illinois.
Interesting.
So that's how I understood, like, what? California, Illinois, 1 and 2 when it comes to burying somebody. So that means cremation could be a better option, or option depending on their status and their financial. So that's the scenario. And then we can graduate to what that business is, and how fast or how anxious she is to go down that route. And if she does go down that route, I can give her some tools, but not only tools, but some steps to ready herself for that particular lifestyle that she's going in.
Okay.
That's why I'm a lifestyle consultant.
Right.
It's not only what you do right now, but it's what you want to be. And then now, once I put you on this possible, train of thought and or rules of engagement, then you can turn around and be like, he told me to do this. And now I can get these credit cards, or I could be eligible to do X, Y, Z, or get a car, or get a piece of property, or get anything, or be eligible to get a piece of property, or not even get just rent something now. So any and all that stuff is generally what I would speak to a client about before we even graduate to the business side. Why? Because that's the first step.
Right.
Or steps that you could or should know, so you understand the value of that, so that when you do get the business, you're gonna value that too, because it's all like tools and I like to call them your utility belt that you can take out like, what? New
Shazam.
Roof, like new roof,
That's like Shazam.
New hot water heater, car went out, kids asked a question or had some issues. Those kind of scenarios that everybody goes through, no matter how and who you are, sometimes what age you are, you want to know that you have spaces and places on your utility belt to go and get access to cash and an annuity or to a cash value and get out of that situation, so you can turn around and keep it going. Or leverage it to get more things. Like the scenario I was telling you about, going to leveraging your annuity when you go and get loans and or credit lines at the bank or credit union.
Beautiful, wonderful. Thank you. I think you have given us a large amount of information to absorb, to take in, to understand. And is there anything else that you would want someone who has misconceptions when it comes to insurance products and services that you would like to leave us with?
Yes. It was hard for me to swallow this, but I swallowed it because I'm an agent of them.
Okay.
Insurance companies. Now, they ain't shit when they do you wrong. But when a situation or circumstances arise and they do you right, this can be a car, it can be a life, it can be a piece of materialistic thing, it can be a concept, it can be a business. So, I'm under the understanding of it's better to be safe than quote unquote sorry. And I know that sounds corny, and I understand it, but think about the value of yourself, your husband, your wife, your kids, your mom, your dad. Think about it. And think about what happens when somebody does not have these insurance vehicles, whether it's on a car, a house, a life, or whatever, how it is after the challenge happens. Let me just say it like that. So I take all that to say that I'm an agent of understanding what the possibilities of what insurance can do for me. So, and the last part, and I will leave it at this, is that I'm urging individuals to learn about insurance, not only for yourself and your age group, but for your mom, for your dad, for your auntie, for your cousins, for your friends. Why? Because everybody in some shape or form can be in these scenarios that I'm talking about.
Right.
Whether it's a good scenario or not so good scenario. And also it leverages the individual to understand that I should learn what benefits I have and what benefits my husband may have or what benefits my mom may have. Why? Because if I don't know what those benefits are, and I'm power of attorney, and I'm in that situation, it's a lot of gaffling going on because of ignorance. I do know that. Whether it's Medicare, Medicaid, any other insurance and all that good stuff. But it's hard to pull the wool over a person that's educated about what their rights are and what's on paper, aka policy. So that's all I would say. I almost sound like I know what I'm talking about.
Just a little.
Just a little bit. I'm still a little pup in the game of life. Anyway.
Well, thank you again. And the beautiful thing is I'm partnered with Kevan, and so you can reach out to us in terms of that education, in terms of that being able to even obtain.
Over there
more.
to shariesthomas.com.
Can you see what?
Right there. That's what they're looking at.
That's
Anyway.
what you're looking at. He said it's right there on the screen. So
He
it's
said-
right by me. That contact information
Sure,
is there. Sha'RiaThomas.com. And also for the bridge of partnerships is Aware for the number yoursuccess.com. To all of access through those lifestyle services to take us from where we are to where we want to be. And there's help there, and that's why I do this, because if we're not informed and we're unaware, then we don't know what is the next steps. And so we have to start with that level of awareness.
Not only the next step, let me add this.
Mm-hmm.
After you get those steps,
Yes.
who do you call that has been vetted and or has been has your best interest at heart, which is a whole nother animal.
Yes.
Meaning, like, you can call somebody, but if you don't know who to call, then it becomes a lot challenging. And I want to thank you, Sha'Ria, for interviewing me, and that's how she mentors me, is that I got all this equipment. And I did it for this reason, but I more so do it for others, for their platform. But it is time for me to share some of the knowledge I have, and I thank you for having me on to share it with you guys.
And he will be back because, as we said, we're doing this in terms of you can do it too. So it's not just to be able to provide the information, the education, the resources and tools so you can fill up that utility belt, Shazam, as I say, and be able to do that next step of what needs to be taken care of.
I see what
you like that?
Yeah,
you like that?
Go ahead, continue.
Is being able to take your next level of success wherever you are in terms of your health, relationships, business, career. That's what we're here for. So we'll see you next time. Take care.